Hi, everyone. Welcome to our debt management webinar, your guide to getting out of debt. This is brought to you by Fitzsimons Credit Union. So we're just going to wait till everyone trickles in, but I did want to mention a few things. That we will announce the winner of the gift card towards the end of this presentation, but it will happen right before we do the open question session. So if you want to stay for that, feel free to, and you'll get your questions answered by some of our financial consultant experts. We will also have a poll that comes up during this presentation. We would really appreciate if you just take the time to answer that so we can get the feedback we need to put on more financial literacy webinars that interest our audience. All right, I'm just gonna continue on. So a little bit about us. We are Fitzsimons Credit Union. We are local to Aurora. We originally founded in Aurora, Colorado, inside what was the Fitzsimons Army Hospital, which the original building is now located on what is considered today the Anschutz Medical Campus. We've been serving the Colorado community for over 50 years, and we offer all the same financial products and services that you would see at a bank. For those that don't know, a credit union is very similar to a bank. We offer all the same exact things. The only difference is we are a not-for-profit, which means at the end of the year, any profit we make goes back to our members in one form or another. That could be to keeping our loan rates as low as possible, reducing any fees, giving you good dividends or high interest rates on savings accounts, so you get more money back into your pocket. One of the things we specialize in is financial literacy. We want you to make the best financial decisions possible and be successful on your financial journey. One other unique thing about credit unions is we are what is part of a shared branch network, which means you can pretty much go into any other credit union. So I'm sure a lot of you are aware of like Belco and Canvas, those ones, and do banking or basic transactions there as if you were at your home credit union. And of course, we are part of the second largest ATM surcharge-free network. So for example, a lot of the ATMs that you would see inside 7-Elevens are part of that network. All right, some of the things that we will be discussing today. How to cope with financial stress and, of course, the stress that debt causes, the steps you can take to tackle debt, and understanding the benefits and costs of credit, debt repayment strategies, and determining which one is right for you, your legal rights when it comes to credit scoring and collections, smart options for debt relief, and ideas that can help you save time on your debt repayment journey and less hassle along the way. But most importantly, our goal is to crush debt. But before I go on, I would like to introduce you to our associates. We have Kim with us and Manny, who are our financial consultants here. They are, this year, they were actually 2020. One good thing about 2020, they were certified as, financial consultants from the Credit Union National Association. So I'm just going to turn it over to Kim first, introduce herself, and then I'll let Manny introduce himself.
Oh, hi, my name is Kim, and I've been with the credit union for about a year, but I've been in finance for 15 years. I'm very excited to get certified. This has been a goal, and it's very exciting to do that. Definitely want to help anybody out there who needs any help. I'm the risk mitigation manager at the branch, so we try and help out with a lot with anybody who's having financial issues and look at each case by case and how we can help you. And so definitely call me if you need anything. Manny.
Hey everybody, my name is Manny. I'm the risk mitigation coordinator here at Fitzsimons. I've been at Fitzsimons for about a year and a half, give or take. Been in the financial world for about 7-ish years, almost 8. Basically, I support Kim in everything we do. So our main goal is to help you guys get back on track or stay on track with whatever life throws at you, which kind of falls into what we're going to talk about today. Just like him, Feel free, at the end, we'll have our contact info, so feel free to reach out.
Thank you. And I also want to let you all know, for those that pre-registered, we will send out a follow-up email. So any resources I mentioned during this presentation, I'll include along in there. And I'll also include the contact info for Kim and Manny as well. And then, of course, maybe as I mentioned before, this presentation is recorded and we will upload it onto our YouTube channel. So if you ever want to go back and, see if there's anything you missed or you need more time to take a look at, it will be available for you as well. All right. So the first thing we're going to cover is debt and the stress that it causes. So first thing I want you to do is take a breath, inhale and exhale, and just keep in mind that, debt is completely normal. From last year, according to data, about 80% of Americans have consumer debt in one way or another. So you are definitely not alone on this journey at all. And even though money is very helpful when it comes to, reducing, some of the, hectic things that happen in life, it doesn't automatically equal happiness. But the one thing that is important to do is don't focus too much on the past, kind of focus on what you have now. And the most important thing you can do now is, be grateful for what you have, and then, come up with a plan to tackle, the debt you do have. But the important thing to do is just remember you're not alone and that you can have helpers or have guidance along the way to help you on this journey. But one of the most important things I want to stress is it's important to take care of yourself, not just when you're handling debt, but, during all times of life. But I know it is very common when you have the stress that debt causes that you can often neglect your personal well-being. So some important things I would like to, want you to focus on is to keep active. Make sure you're nourishing your body with good, healthy food. Make sure you are keeping up with those annual wellness visits. If you do have insurance, a lot of those insurance programs will cover the cost of, that annual physical or whatever term your insurance provider prefers you to use when it comes for those annual visits. Make sure you're keeping up on top of those so you're aware of, any things that are going on with your body. So you're not ignoring those, so those would end up being more costly for you in the future. But another thing you want to focus on is your mental health, which I know in the past it just wasn't as thought of, but just so you know, there are a lot of resources out there. I know a lot of clinics can help you on a sliding scale, so you can see a therapist for as low as $30. Of course, we aren't experts in that, but it is certainly something you can take a look into when you're going on this journey. Some resources that I do want to mention is, let's say, you do need to go on those annual wellness visits or keep track of your mental health. If those are a priority for you and you're having trouble with maybe your grocery budget, you can always go to the Food Bank of the Rockies, Village Exchange Center. I know those places try to do a good job to make sure that they are offering you food that keeps you on a healthy diet. So they try to give you a variety besides, canned goods, try to give you fresh fruits and vegetables, breads, meats, everything you need to stay on a healthy diet. There's also the SNAP program. If you are a renter or even someone that is a homeowner, a new resource that is out there is Renters Avenue, and they have a full list of resources for whichever situation you might be on. And of course, maybe a lot of you kind of heard of us from Mile High on the Cheap, and that's a good place to go to if you're looking for cheap or free fun. One thing I do want to touch on is the importance of your credit score and keeping on top of what is in your credit report. So your credit report is generally a record of your bill paying history and all that information that goes in and factors into what your credit score ends up being. Your credit score can range from anywhere between 300 and 850 if we're using the FICO score, which is the most commonly used method, or with the Vantage score, it can range anywhere from 500 to 990. There is no such thing as having a credit score of 1,000. It will usually range between these numbers. Another good thing that I like seeing is the average credit score in America has been slowly increasing year by year by year. So in 2020, it is 711, which is a great number. I remember the year before that it was 693. So even though, you know, times are difficult, it looks like more and more Americans are becoming more educated on their credit score and credit history. So they're able to keep making those improvements. The higher number your score is, the more favorable terms and rates you will get when you do need to take on new debt. The people that can check your credit score and report are potential lenders. So for example, your credit union, your bank, those sort of things, insurance companies, sometimes your landlord, and sometimes potential employers. You are entitled to check your credit report for free from each of the bureaus for free annually. So you can check your credit report at annualcreditreport.com. That is the only place that you can check your report for free, and you can get a report once your TransUnion report for free, your Experian report for free, and Equifax report for free annually. So a lot of times people will decide to divide it up for the year. So for the first section of the year, they might get their TransUnion report. Later on, they might check what is on their Experian report, Equifax, and so on. It's just always good to look to make sure all the information on there is accurate to you. You know that anything that you're paying is showing up on time, and every once in a while, sometimes mistakes happen. Sometimes information that is from another borrower ends up on your report. So it's always good to make sure that information doesn't end up on there, and also make sure that no fraud or anything is appearing on your report that you're not aware of that can mess with your ability to take out credit in the future. Okay, so as an example, the cost of poor credit. So we're going to use an auto loan example of $14,000 with 48-month term. So for example, let's say you have that fantastic credit score of 725 and you got an interest rate of 5%, but let's say your score is more on the lower end and you get a percentage rate of 14%. Now your monthly payments aren't too much different, it looks like, but over time it does add up. So that difference in interest rate can cost you $3,000 in the long run. So it's always important to keep on track of, you know, making sure you have good credit history and a good credit score so you can get more favorable rates in the future. And this is a good way to kind of keep yourself out of debt in the long run. And as I said a little bit before, because of the FACT Act, you are entitled to check your credit report for free annually. If you want to do it other ways, besides going to the website, you can always mail a request letter, or you can always call this number. And this isn't as common anymore, but there were a lot of websites that claimed that you could check your credit report for free, but there would be fees on top of that. So always just be sure to be aware of what you're agreeing to, and if someone's asking you to put in, you know, card information, most likely it's not a free report. Just something to mention: members of Fitzsimons Credit Union get access to something called Credit Sense. So that means you're able to log into your online banking, and we're able to give you your TransUnion credit score, and you're able to check your TransUnion report. It is kind of cool because we do update it as much as we can, and you can also see what the average credit score is within your area code. So here are the 8 steps to tackle your debt. 1, we're going to look at knowing what you owe, and this would be a key point in, you know, coming up with a plan to tackle all that debt. Reevaluate your credit card or spending habits. How to find extra cash to pay off that debt faster. The pros and cons of 401k loans. Considering consolidating or refinancing any debt that you may have. Methods to pay off debt. What you can do with creditors, how to contact them, and how to request them to stop contacting you, and, you know, how to get help along this journey. All right, So the first thing you need to do is know what you owe overall. So we need to look at your debt to income ratio. So you need to look at your total liabilities or total things you owe. So you can look at things like your car payment, your average credit card payments that you need to make, and the money you're taking in overall. So it is ideal to have a debt to income ratio that is less than 35%. Anything between 35 and 45%, you could be in a trouble area, and the higher you are to that 45%, is an indicator that you need to reevaluate and come up with a plan to tackle that. And in the 45% area, you're definitely in the danger zone, and you need to seek help immediately to come up with a plan to get that down to the ideal ratio. So in an example, we have, let's say you have maybe a car payment and a mortgage payment that adds up to $1,200, and your monthly income is $3,500. Then you would have a debt to income ratio of 34%, which is ideal, but again, it's getting into that area, so maybe some reevaluation needs to be made to either refinance or consolidate some debt to get that ratio a bit lower. All right, another thing you want to look at is, look at the relationship you have with credit cards. If you are in an area where you need to come up with a debt repayment plan, it is important to not take on any new debt as much as possible. So if credit cards are a root of some of your debt issues, it is important to stop using credit cards as much as possible. Now, one thing I do want to mention, if your debt repayment journey is a long one, is when it comes to credit cards, if a credit card isn't active for a full year, there is always a chance that the creditor can close that card, which can affect your credit score in the long run, especially if your credit card was your original form of, well, credit, or your earliest form of borrowing, which is the case for a lot of people, because a lot of times people get a credit card before they take out an auto loan or a mortgage. So it's especially crucial for your first credit card to make sure that it is active, but you don't have to use it, or we recommend you not using it if that is contributing to your debt overall. If your credit card does get closed, you can always contact that company and ask them to reopen it up, but that is something to keep in mind if you make the decision to stop using your credit cards altogether. But if you have credit cards that have a high interest rate or come with an annual fee, you can always look at maybe closing out some of those cards or just not using those cards if you can. It just depends. You can also contact the creditor and see if they can come up with a different plan for you, or switch you to a different credit card, and maybe that'd be a good way for you to get out of that credit card that has a high annual fee. You definitely want to make sure, if you do have those credit cards with rewards and those sort of things, they sometimes do come with those annual fees. So you want to make sure you are getting the benefit of those cards if you are not necessarily having them being part of your debt plan. An important thing to note is your credit card should not replace your emergency fund. Even though they can be helpful in emergencies, it's always important to have a savings account with emergency funds in place. So let's say if a car repair is needed, or a medical bill does come up, or you do end up out of the job, you have that in place instead of using that credit card firsthand. This could be something to look at for the future if you do want to start utilizing credit cards again, but it's always a good source to go to nerdwallet.com, and that's a good place to get a good overall view of the interest rate of credit cards, their benefits, their annual fees, and that sort of thing. Also be aware a lot of credit cards have an introductory rate, or a year without any fees. So whenever you're signing up for a credit card, always make sure you're aware of that thing, or all like the hidden terms and conditions with that. And for anyone that has questions, we will answer those at the very end with Manny and Kim, but feel free to keep entering those in. Next, how to find extra cash to pay off debt faster. Make sure you establish a debt, or not debt, but establish a budget. Next month, we will be covering more into credit and budgeting, so essentially creating a spending plan to help you on this journey. If you can, consider adding an extra source of income. These days, a lot of people do have to have a side hustle, so look at what options might be good for you, but an important thing to look at is to not confuse a hobby versus a side hustle or, you know, another source of income. When it comes to that, make sure if you are, you know, creating another source of income, to create a separate account for that, so you are making sure that that is a space that is generating income for you and not another place where you are losing money at. You can also look at getting on track for a pay raise or a higher paying job. And then you can also look at liquidating some assets, having a garage sale, or, you know, selling any unneeded items you have online. But another important thing is to be aware of scams. So always be wary of anyone that's trying to pay for any items you have with not credit cards, but gift cards and those sort of things. You know, the general rule of thumb is something is too good to be true. It probably is. We have another past webinar that covers all the types of scams and fraud that are out there. So if you want more information on that, feel free to take a look at that webinar. Another thing to look at is, you know, adjust your withholdings on W-4s. This can be tricky because essentially anytime you earn a source of income, Uncle Sam has to get a piece. So a lot of times when more is being taken out of your paycheck than should be, that's how you get a huge tax refund at the end of the year. But there's always a chance where you're a little too little is withheld, so you'll end up having to get a fun surprise at the end of tax season. But always important to look at that if a huge life event has happened, either you get a new job or you get married, have children, and that sort of thing. But when it comes to that, it's always important to go to a tax expert and get the information so you know you're making the best decision as possible for yourself. The use of 401k loans. So always make sure you're using these with caution, and you would always want to talk to a good financial consultant before you make this decision. But there are benefits to it. Essentially, you don't have to take out an application. There's no credit check, but you can borrow up to 50% or less of basically what you have contributed into your 401k. It is nice because, you know, it gets shielded from taxes and penalties, and essentially you're technically paying back that loan to yourself. But there's a lot of things you need to be aware of for that. If you do stay within the company, you have 5 years to pay it back essentially, but if you lose or quit your job, you could have 30 to 60 days to repay that. There could be penalties and fees in place when you take this out. So always make sure you are talking to an expert before you make this decision. But it could be a good option for you depending on your situation. And that's one thing I do want to emphasize, that everyone's situation is different. So there is no one plan for everyone. And Kim and Manny can definitely assist you with that. Consolidate and refinance debt. So depending on whatever loans you have, you can always look at consolidating or making a refinance. So the goal of either or is to make sure you have a loan with more favorable payoff terms, either a lower interest rate, lower monthly payment, or both, something that is in the best interest of you. Cons of this is that it could impact your credit, depending. You are essentially starting up a brand new loan, so you always want to make sure if you are consolidating debt, that there's no tricky areas with that. And another thing to keep in mind is, since you are essentially restarting a loan, you could end up paying more overall with that. With certain loans, when you're refinanced with a car or home, those are considered secured. So if, let's say, fail to pay those back, you could end up losing your home or car, depending. With personal loans, those are unsecured, and those usually will have a higher interest rate in place. You can also look at doing a balance transfer with credit cards, or taking that debt and putting it into a personal loan and consolidating it and hopefully getting a lower interest rate overall. So an example of a car refinance, so let's say this is usually a good case of someone that maybe didn't have too good credit starting out, but made huge improvements to their credit history and credit score, so they were able to get a more favorable loan. So originally they got a loan for 6%, and then they were able to get a lower rate at 3%. So they were obviously able to have a lower monthly payment, and they were able to pay less overall for that. And then here's an example of debt consolidation. So let's say you have 3 credit cards at 28%, and you're able to put it into a consolidation personal loan at 12%. Now the monthly payments are the same, but the terms are a little bit different. And as you can see, overall, that is a huge difference of at least $3,000 to $4,000. Just something to be aware of, just this month we started up some new promos. So we do have an auto refinance offer. So if you bring an auto loan to Fitzsimons Credit Union, there is a chance that we can lower your interest rate to something lower than what you already have. Plus we'll give you $200 cash back and 2 months of no payment. And then for home equity, we are offering no closing costs on rapid refi mortgages or easy equity loans. And in some cases, if it is in the best interest of you, you can use that equity for debt consolidation as well. So there's 2 different methods to pay down debt. We have something called the avalanche or power pay method, or the snowball method. Now, the power play or avalanche method is basically when you focus on paying the highest amount of debt first and then making the minimum payments or on the other debts you have. This is the most effective and, will ensure that you're able to get that debt down faster, since you are tackling the hugest source of your debt first. But, humans aren't always logical creatures, and, tackling debt can be very intimidating. So some people like to use what is called the snowball method. So basically you are paying off the smallest amount of debt first, and then you tackle the next one and the next one and the next one. For anyone that's played video games, it's kind of similar to when you start off and everything is easy and you're like, oh, that's not so bad, but you get the reward of getting to the next level and next level and next level. So you're able to keep on going and get the motivation you need to continue on that debt repayment journey. Now, as I did mention, that you do want to pay them at least the minimum payment on your loans, but it's always best to pay a little bit more because that interest can be really sneaky and tricky. So for this example, let's say you owe $2,000 and you make the minimum payment of $80 to start. With that, because of the interest, it might take you almost 10 years to pay off, and you have huge interest of $1,000, so your actual cost ends up being $3,000. And then for paying a little bit more, so just $20 more a month, you get that down to 2 years, and then you end up saving yourself $720. And as for the expiration for the auto refi promo, that will be to 3/31 of 2021. I do apologize, I went over that really quick. Now, if there is a situation where your debt has been sent to creditors, it's always a good idea to talk to them before they contact you. Believe it or not, they do want to work with you, and they honestly want to make sure this debt is taken care of. So, consider talking to them. You can look at seeing if you can get that interest rate lowered or getting your debt reduced as well. It is a bit of a negotiation type of thing. So you can kind of start out throwing in like the lowest amount that you would like to pay back and go from there. So they might send you a counteroffer and let you know, okay, well, this is the agreement that we want you to pay back, sort of thing. And just so you know, if you are being contacted by debt collectors, they're not allowed to threaten you or intimidate you. They can only call you, I believe, between 7 a.m. or 9 p.m., so reasonable times. They are able to contact friends and family, but they're not allowed to kind of talk about your situation. Essentially, they're just trying to figure out where you are so they can talk to you in person. But you are allowed to request them to stop contacting you, and they will stop contacting you, but they will either give you a final message or a final call to let you know this is the action that they will take going on forward, but you are able to request them to stop contacting you. But it's always important for you to talk to them first and see if you can figure out a good payment plan that works for both of you. Now, if things haven't already gotten to creditors, which is a good thing, we want to make sure that doesn't happen. Make sure you're contacting your financial institution. So let's say you have a car loan and you get in a pinch, like you lose your job or that sort of thing. Make sure you contact them as soon as possible. They can either come up with a plan to either reduce your monthly payments or, you know, get you on a plan where you might not have to pay for a couple of months until you are able to get back on your feet. But always make sure you are contacting your lenders and see if you can figure out a plan when times do get tough and you end up being in a little bit of a pinch. Beyond Manny and Kim, you can always talk to a consumer credit counseling service. There's a lot of good ones out there. There's Green Pass Solutions. There's also the Credit Counseling Society. Some of them do have a small fee between $0 and $100. So if you are in a situation where you need maybe more extensive hand-holding or, you know, planning in place, you can always look at those services as well. Now, there's always the case to go into bankruptcy, but that is always a last resort, because if you do want to bankruptcy, that can be on your credit report for 7 to 10 years, and that can affect your ability to, you know, take out any future loans or credit in the future if you do ever need that. So that's always a last resort when it comes to that. In some cases, you might be required to make continued payments, like in the case of Chapter 13, and bankruptcy does not get rid of student debts or things like child support either. Things to avoid. I think these are becoming less common, but I know they still exist. There's credit repair clinics that claim that they can remove information off your credit report. The thing with that is, if it is information that the credit bureaus have decided belongs in there, you might be able to hide it temporarily, but it's impossible to get that information out there. The credit bureaus believe that is valuable information is connected to your credit history. Now, as I mentioned before, if you see any information on there you believe is a mistake, you can contact the credit bureaus and ask them to investigate the situation if you believe it's connected to fraud or some kind of mistake. But any activity or information that is connected to you personally can't be removed off there until it's actually time for it to be removed. Be aware of loans that require an additional fee for you to take out that loan. Of course, lots of scams. Rent-to-own places, of course, aren't as common, but, you know, there are a lot of different resources out there that you can go to get furniture or things like that, besides going to these places that end up making you pay 3 times much more for something than you could have gotten, you know, cheaper new, or, you know, you could have gotten something more at a thrift store or off of different digital marketplaces that are out there. Be aware of payday loans. We'll go more into that in the next few slides. Just basically anything that is, you know, requiring a higher fee or interest rate than what is necessary for you. Now, I just want to point out a little about the payday lenders. So Fitzsimons has what is called a partner's instant cash loan, and you can borrow that loan for $1,000 for 90 days. We do have a 28% APR, and there is an application fee. But the total cost for those 90 days is $48 overall. And there's a comparison with a typical Colorado payday lender, where, you know, you borrow $1,000 for 90 days, and then those fees and interest are $75 for the application fee, and then, of course, additional charges for borrowing that money. So from another payday lender, it becomes $964. But before I did this presentation, I decided to go to an official website just for, to show that we aren't making those numbers up. So this is an example from another payday lender. This one is for a 98-day loan term. So you are borrowing a $500 loan, which a cost of $595 because they're charging a $95 fee. And you have all these other fees, and then their APR is 118%, 0.25% APR. So even though I would agree the 28% APR is high, it doesn't quite compare to what you would see at a traditional payday lender. So that's just something I wanted to point out. Now, you should only do a payday lender if that is the best option for you in the situation. But, you could always look at other personal loans with a lower interest rate. There's a lot of other alternatives before you go to a payday lender, or even consider the partner's instant cash loan. So tips to stay out of debt is to build an emergency fund. You always want to have 3 to 6 months worth of living expenses. It's always a good idea to automate as much as possible. So if you are getting a paycheck in, see if you have room in that budget to automatically start putting $100 towards that fund, or ever how much you can put towards it. Because I know with my case, especially if I don't automate that automatically, then that money doesn't automatically end up in that emergency fund. And then, yes, I would like to mention having that emergency fund should be a good priority before you look at your retirement savings, because like I said before, credit cards or personal loans should, of course, if you are in a pinch, you should have emergency funds in place more in the first, little things do happen in life. Of course, create a spending plan. We'll talk more about that next month if you would like to visit us. Also, keep your credit limit or credit utilization low when it comes to your credit cards. You always want to spend 30% or less of your available amount when it comes to that. And always make sure you pay bills on time and automate as much as possible. What to do with windfall? So, stimulus payment that we've been getting is a good example of a windfall. So, windfall is a large and many times an unexpected financial gain. So yeah, like I said, stimulus payments, sometimes it can come into a company bonus, inheritance, sometimes it's tax refund, those sort of things. In certain cases, you may have to pay taxes for that, but in the case of, let's say you get something like, I don't know, you win the lottery or you get an inheritance, you will definitely want to talk to a financial professional to help figure out your financial situation with those funds. But if you do get a windfall, if you haven't already set up your emergency fund, that should be a big priority for you. And then you would want to look at maybe tackling some of the debts you have, putting that money towards retirement, so your 401ks, your IRAs, stocks, certificates, those sort of things. Look at funding any life or career goals, so you can look at getting that continued education. And then maybe you could look at giving yourself a bit of a treat. But that should never be your first priority. So always look at some certain things that should be on the horizon to make sure you have all your ducks in a row. And then this could change from individual to individual. Maybe in your situation, your debt should be your main focus and then the emergency fund. But that's why it's always good to kind of talk to a financial counselor first to get a good idea for that. One thing I want to mention, it's always important to have helpful apps with you or tools. So with any financial institution you're with, I always suggest having that financial app with you so you can always log into that account and see, what's going in and what's coming out, so you have a good financial picture of what's happening with your finances. Now, it's always important to avoid temptation. So if you are getting credit card offers in the mail or those sort of things, you can always call this number. You can always go to this site. And also, when it comes to online shopping, you want to unsubscribe from any mailing list that you can. So the internet is a bit of a curse. Sometimes there's a lot of benefits to it. There's a lot of good resources. So especially like when I mentioned earlier for self-care, you can always go online to get free workouts or good recipes or those kind of things. But with being online on social and email, there's always temptation. So if you're always getting these emails that are tempting you to make a purchase real quick because there's a great deal, it is probably in your best interest to unsubscribe from those, because if that temptation is not there, then you're not as likely to spend. And it's the same for on social too. If let's say you're on Instagram and everyone is presenting their best life out there and you're wondering why you don't have that life, so that causes you to maybe make some financial decisions that aren't really in your best interest, it's probably best to maybe remove those from your life so that temptation is not there. Some important notes that is that COVID student loan deferment ends on January 31st of 2021. So if you have those student loans, make sure that you are creating a plan now to get back on track to paying those. Another thing I want to note is medical debt is treated a little bit differently than a lot of other types of debt. It does not automatically appear on your credit report, but it can appear on there if, let's say, you have medical debt that you haven't taken care of, and eventually it will get sent to a collection agency. In that case, it can be on your report for up to 7 years. And another thing to keep in mind, if you do have insurance, always make sure you're getting the full benefits of that insurance and making sure that your insurance is doing their job and, paying for, any visits or physicals that they are required to pay. Just some know your rights and responsibilities with certain things that have passed. And then if you are interested in getting a free financial counseling session and creating a personalized plan for you, feel free to reach out to Kimberly or Manny, and I have provided their contact information below. And I will send that to you by email as well. Now for the Visa gift card winner. All right, so the winner is Billy Williams. So Billy, I will be sending you an email and I will give you the information you need to redeem that gift card, but congratulations. All right, question time. So I'm gonna go through the ones that have already been submitted, and I will leave it up to Manny and Kim to get some of those answered. And I know it's been a really busy chat. All right. Thank you all for your patience. All right, so first question. I've been told that student loans count, but don't count towards your credit score. Is that correct? And if so, why?
So as far as that goes, I think there's a couple different things to it. For lenders, when they're looking at the student loans, they're not looking at them as much as they are other loans or things on your credit, just because student loans are pretty easy to get, and also you can put them in deferment really easy. You can work out payment plans with them really easy. So I don't think from a lending point of view, they're looking at the student loans as much. From a credit report stand of view, they do affect. If you miss payments, it will lower your credit score. If you get new student loans, it can affect your credit score, but then as long as payments are made on time, it can help increase the credit score. Probably not, maybe not as much as like if you got a mortgage or something like that. But as far as credit scores go, it does affect your credit score. But from a lending point of view, they're going to be looking more heavily at mortgages and auto loans and credit cards. Like that.
All right, and then I have one that says how to make trust for the finance. I'm not exactly sure what that one is referring to. Santa Pong, if you're able to elaborate on that more, that would be helpful. I'm not sure. Do you know what that one's referring to, Kim?
I'm sorry, I don't know.
Okay. If you can please elaborate on that one a bit more, then we can get that answered. Is Credit Karma free? I believe that one is. It is. I know that they supplement it by, having credit card offers and those sort of things on there, but you can access it for free. And as I mentioned, our Credit Sense Savvy Money that we offer on our online banking mobile app, it's essentially the same thing. You're able to check your credit report, but it's just your TransUnion score, but it is basically the same thing. I don't know if you want to add to that at all.
Nope, I think that sounds great.
Yeah.
Okay. What if there are old 3+-year-old paid off charges on your report, which is affecting the FICO score?
I'll take that one.
Okay.
So definitely want to contact whoever that's from and try to work out something with them to get that paid or settled. If you do come to a settlement agreement where it's like, let's say you owe 3,000 and you're like, I'm only going to do 2. Just keep in mind that could still be reported on your credit as paid for less than the full balance, which some people are going to be like, well, you paid it kind of, but you only paid, 2,000 of it. You owe 3. So definitely try to get that taken care of and try to pay it for the full amount. So that way you paid back everything that you borrowed on that.
What happens if you quit your job? What happens to your 401k?
I think it's up to the company, but usually you can roll that over to your new 401k or like an IRA at whatever bank you're at. You could probably take it out, but you're probably going to pay fees and taxes and all that good stuff.
You can also probably just keep it there if it's cheaper for you.
Most companies use like a third party company to manage their 401k, and they have nothing to do with the company. They're just managing for them, so you can just keep it there too.
All right, and I think I mentioned this already, but for all our promos, those are always done on a quarterly basis. So for the current home equity and auto refinance promo, those will end at the very end of March. So March 31st is when those will end. But as long as you apply by then you'll be able to qualify for that promotion. So you don't always have to send the paperwork, you just have to apply by that time. Question, I called today about an auto loan refi after being on hold for over 30 minutes. Call was disconnected. What is the best number to call? In cases like this, because I know our call time has been higher than usual due to people wondering where their stimulus payment is and that sort of thing. And unfortunately, we don't have a lot of control of when that is being deposited in, and that's kind of caused an increase in calls. But you can always call that number. If you have a loan officer that you've been talking to and it sounds like you don't quite yet, we can always give you that phone number. You can also send an email to info@fitzsimonscu.com, and you can let them know that you need to talk to someone about a loan, and then they will forward it to one of our financial consultants or our loan officers, and then they can contact you directly. But if you let us know who you are, I can definitely make sure someone gets in touch with you. So if when I send out that follow-up email, if you want to reply back, I'll definitely get you in touch with someone. I do apologize for that. What do you think about the free money people offer on Facebook?
I don't think I'm familiar with that one, sorry.
I don't know if this, because I know I'm in some of those like shopping or buying groups, so I don't know if this is the case for someone's like first 5 people to share gets $100. I think a lot of times those things are connected to scams, but I'm not specifically sure what this is connected to. But I know there's been some like influencers out there that do generally give people some amount of money just because, but a lot of times those things are usually connected to some kind of scam. It's very rare that it's actually a person giving you some kind of money. So always be aware of those. How do I enroll in a snowball plan? So a snowball plan, it's not really like an official plan. It's just a personal decision you make for yourself to decide, I'm going to tackle this loan first, and so on and so on. There's not really an official plan. It's more of a method to pay down debt. So it's always suggested to try that avalanche or power method first. But if that one isn't working for you and you need that encouragement, you can always try that snowball method.
Also, if you have like direct deposit with your job,
how many points does your credit score drop?
Hey, Shannon, I think you cut out there.
For the snowball,
Card is closed when it. Oh, that's not good. I know.
You can contact Manny and I, and one of us would be able to help you also if there's something you wanted and questions on or something we could help you with.
Sorry, you guys did cut out for a moment. Did you answer that? I wasn't sure.
I don't think we heard your question.
Oh, okay, I do apologize. It was how many points does a credit score drop when a card is closed?
That's kind of finicky just because there's so many things the credit bureaus look at, like how long you had it, the balance on it. And then it also depends on who you ask, the 3 credit bureaus. So it's kind of hard to give you like a set answer. So I don't know, Kim, do you have anything?
I don't. I know that also if you have a higher credit score, anything like that can be different. You can get a different amount taken away than if you have a lower credit score. So there really is a lot into that.
Yeah, I mean, it just depends completely on your credit history and situation. Yeah, unfortunately, we don't always fully know how the credit bureaus or credit score system is fully done. So there's always little fun surprises.
I know definitely it'll affect you more if it was your first credit card. Because then it kind of cuts back that length that you've had credit.
Yeah, and we'll go more into that next week, but your credit score is based on your payment history and also, your average credit history or like length of time you've had credit. So it's always important to have that first initial credit or first credit card on there.
And also having a mix, having several different kinds of credit open is important. So if you close one of those and that's the only one you have open, then that's going to affect your credit score more than if you have 3 other credit cards also open.
Yep. How do I get access to my FICO score? Is it free? I can answer that partially. I know you can get it from what someone mentioned, Credit Karma, or from, through a lot of financial institutions offer you to view your FICO credit score for free from at least one of the credit bureaus. But I don't know if Manny and Kim, you want to add to that.
Yeah, I think that kind of sums it up. Yeah, sometimes your own bank, even if you don't have credit with them, will offer that to you. There are some banks that even if you don't do business with them like at all, they'll let you check your FICO for free as well, just online.
Yeah, and I think that's why the average credit score in America just keeps going up and up, because Americans are just, consumers now just have more access to that information more than ever before. So, I've just been seeing it over the past few years. It just keeps going up, which is a good thing. Should I keep a credit card because it will insure my cell phone with a $250 deductible?
I think that kind of comes back to like what Shannon was talking about earlier, is like, are the benefits something you're actually going to take advantage of, And personally, I like insurance, so I definitely would keep it. So I guess it kind of comes down to a personal preference.
Just as long as that credit card isn't costing you more in the long run. You don't want the cost of that credit card to outweigh the benefit. So you would have to look at, the fees that you have, and if you're getting interest rate from not being able to pay things off on a monthly basis. But if you're the type of person that's able to, or you're in the type of, not person, but you are in the path right now where you can pay that off on a monthly basis, and not get that high interest rate, then yeah, feel free to keep it if it's benefiting you on the long run. How do student loans affect the home buying process? Do they look at the total amount owed or monthly payments?
Well, they will look for sure at your monthly payments because they do look at your budget to see if you can afford the mortgage payment. They can look at payment history. Each mortgage lender is going to be a little bit different upon their requirements. They probably will look at that differently than they will look at your mortgage history in the past or car payment history or other creditors' history. But it still is a factor on the credit report.
Do we offer credit repair assistance or counseling?
I would say kind of like informally, just kind of like in this sort of setting where we can just kind of give you tips. But there's nothing set in stone or in place as far as I know.
But we'd be glad to talk to anybody one-on-one and individually.
Mm-hmm. And we're always looking to extend our financial literacy or just financial offerings to help you guys out. And we are still looking to extend that just this year outside of the webinars we're offering. Are there any perks or benefits of being part of a credit union? I would say so. It doesn't necessarily have to be with us, but, you know, credit unions are very community-based. So one of the things I forgot to mention is when you're with a credit union, when you join and become a member, you essentially own part of that credit union, versus when you're a bank, you're considered a customer, and technically the big rich stockholders are the owners of it. But when you join a credit union, you're essentially part owner. You get the ability to vote who our board of directors are and that sort of thing. And because we are not-for-profit, we do try our best to offer you, you know, lower loan rates. Our checking accounts are fee-free, which, you know, is becoming more common, but I still notice a lot of the big banks, they will charge you fees for not having enough money in the account or all those sorts of things. So you definitely want to be with someone that doesn't charge you for keeping, you know, your money secure. So I noticed a lot of credit unions do offer free checking accounts. So you always kind of like do your research and see, you know, which one aligns with you. But I think Fitzsimons is pretty great. We offer a lot of great different products and service offerings. And I can definitely go more into that, but, you know, check us out on our website and just kind of see if we are a good fit for you. Yep, you can join Fitzsimons online. Our application can be accessed through mobile or online. So yeah, you can always just, you know, pretty much click on any button online. It will take you to our application and you can get started on that process there. But if you want to learn more about us, feel free to reach out and we can, you know, tell you more about us and what we offer as well. Are there any promos now for new members? You know, we do occasionally offer like promos for new checking accounts and those sort of thing. So you know what, I will send you more information on that if you would like. So I'll make sure to reach out to you personally about that. But yeah, we do offer promos for new membership. How are student loans factored into the DTI if my loans are in an IDR? And I feel bad, I do not know those acronyms. Do you guys know those acronyms? Do you want me to read it again? Let's see.
I think IDR is like a form of payment, I believe.
Okay. I'm
like,
very embarrassed.
That's right. And I'm not 100%, but I'm pretty sure it's like based on income. Like they say, okay, based on this income, you can pay X amount. So I think with that, you know, it affects your DTI. What was the other part of that question? I'm sorry.
All right. How are student loans factored into DTI if my loans are in an IDR?
Okay, so yeah, whatever that payment is will would be what affects your DTI.
All right, and then this is another question. On car loans, what term gets you the best rate, 60 or 72? What are the pros and cons, like hidden fees to refinancing?
So I think it's going to be, I think that's going to depend upon your credit. So it depends upon what kind of rate you're going to be able to get. And then if you can get a lower term, you're going to pay less interest because you're going to be paying on it for a less amount of time. But that's going to come back again to if there's any fees involved, because every financial institute will be a little bit different depending on how many fees they do charge, if they charge fees, what their rate is. Some might have a lower rate if you take a shorter term. Some, I mean, it could all just be different. I think you should sit down and look at comparables and kind of determine that way is one of the best ways to look at that.
Yeah, I know it's best just to kind of, you know, sit down and look if, let's say, you got offers from multiple financial institutions to look at what you are paying overall in the end. I know sometimes people have a habit of focusing on like, oh, I'm only paying $270 a month versus $304 a month. But, you know, due to like different terms, you might end up paying more overall depending on what the offer is. So it's just kind of focus on what that overall cost will be in the end. And a lot of times, even if you do pay it off early, they have that factored in to a point. So it's just kind of want to look at, you know, who is giving you the best offer. And I know with a lot of cases when you are getting loans, you can batch them within, is it 72-day period? But usually you can apply to multiple financial institutions within, I'm going to say within a 50-day period. I'm going to have to double check with that, but at least within 30 days, you can apply to multiple financial institutions, and then you can have multiple of them give you an offer. And usually when you are doing that, like applying for the same amount, within a short amount of time, those inquiries get batched into one inquiry, so it's not as impactful to your credit report. So that's always one thing you want to look at. But, you know, if you are part of multiple financial institutions, you know, feel free to, you know, see who can give you the best offer and see what can be most beneficial for you in the long run. But if I am wrong in that, feel free to chime in, Kim or Manny.
No, that is right. That is accurate.
All right. How can you build credit without utilizing credit cards? So Fitzsimons does offer something that is called a credit builder loan. So essentially, you know, it is a loan that is designed to help, you know, pay back and build your credit. So I think basically what it is, we open up what is essentially a savings account that you are paying into, and when you're paying into that account, we are reporting it to the credit bureaus, and then, you know, once the loan is done, you technically have access to the funds you paid into that account. That is the simplest way I can describe it, but feel free to fill in, Kim or Manny.
You know, we have one that's kind of a secured loan. So basically, like if you have $1,000, you can deposit into your savings, and then we'll do a loan off that $1,000. And every month you make your payment, and it'll get reported to your credit bureau. And I know usually they have a pretty low rate on those two, since, you know, the loan is fully secured with that deposit you made. And that way it doesn't like tempt you to buy stuff like with a credit card or, you know, things of that nature.
All right. Oh, and then I love that they correct, it was back to like the student loan. DTI is debt to income, IDR is income driven plan.
Okay, cool.
But yeah, my bad. That's very embarrassing, but thank you. And I believe it's Geneva. I apologize if I got that wrong, but thank you. My oldest card has the lowest limit of $300 and charges an annual fee. Is it still ideal to close that card?
If that's your oldest card and that's given you the longest amount of credit history, I would probably keep it open even if you're not using it, as long as they don't close it, just so that you can get that length of history included in your credit score.
Do you know in cases like this, if they contact the provider, if they were able to do something to either roll them into like a different card or something like that, so they're not having to end up paying that annual fee?
I think you'd want to contact them to find out for sure on that answer.
Okay.
They're
I know it
probably a little bit
depends,
different depending
but
on the lender.
it doesn't hurt to ask and see if there's a way you can avoid paying that annual fee.
Definitely ask for sure. So, and I mean, if you have several cards that give you history behind it, maybe it is to your benefit to close it. If that's your only card and it's been open for 10 years and your next card is just opened 2 months ago, you might want to weigh that and see what you think would be better for you.
I'm going to guess by lowest limit, that's the amount you can borrow from. So if you've been with them for a long time, you can see if they can extend it to something higher, so it is a more beneficial card for you in the long run, even if you aren't able to get that fee moved or changed. Does your credit score drop if you lower your available credit, for example, from $3,000 to $500? And I would say yes, but I don't know if you guys want to add into that, because I know, you know, your available credit is a factor into your overall credit score.
Right.
Yeah, I would say yes. Especially if that's like, if you have 2 credit cards and your total credit limit is like 6,000, and now you just cut it pretty much in half. So you have a lot less on your credit.
And if you have anything on those cards, all of a sudden your ratios have adjusted, and that can really affect the credit score.
Next question. I feel like this might be a question we would have to refer Steve to, who does a lot of our financial planning with members who are focusing more on retirement and investing, is what do you think about Forex day trading? I have a couple of friends who have turned a 10K investment into 70K. I don't think you guys have anything to add on that, but if not, I can always see if we can contact Steve, who does a lot of that with our members, and see if he has any thoughts or opinions on that. Since investing and those big retirement plans are usually a little bit beyond our scope a bit. All right. So supposedly those are all the available questions. So I don't know if anyone has any last minute additions. But I will definitely send up a follow-up email with contact information and resources. And for those of you that might need additional contact, I will reach out to you guys personally and give you some of that information as well. But I want to thank you guys so much for sticking with us and for joining us. I hope we were able to provide you with some helpful information. But definitely, if you want to meet one-on-one with Manny and Kim, feel free to contact them. Oh, we have another question. All right. What is the best way to invest without high risk? What are the rates for money market, certificate deposits, or other types like these? Oh, another question. Okay, we missed some. All right. But if some of you are free to want to leave, feel free to do so. But we'll definitely try to get these questions answered. What is the best way to invest without high risk? What are the rates for money market, certificate deposit, or other types like these? So I know when it comes to money market certificates, those are generally favored by those that are getting closer to the retirement age, since, as a lot of people know, the stock market is very finicky and a lot of changes happen to that. So if you have been saving for a long time, you definitely don't want to, you know, lose that investment. And again, we're not actually, you know, financial planners when it comes to retirement, but I've heard, like, you know, the older you get, you want to put more towards those money markets and certificates the closer you get to retirement, sort of thing. But that's the only suggestion I have. But I know it's a personal choice versus if you want to be in a money market or certificate. It would really just depend on what is more beneficial for you. I don't know if you want to add to that.
I don't think I have anything to add to that.
Okay.
Yeah.
If need be, I don't know if I have the information for the attendee that entered that in, but that might be another good question for Steve as well. All right, I think that's it. Thank you all again. All right. Again, I'll be sending up a follow-up email. If you haven't gone through the poll, make sure you answer that. We would really appreciate the feedback. Thank you all again. Bye.
Bye, everyone.
Bye.